Big week this week in the markets. Guys, behind me are all these companies that are reporting. We've got the Fed rate decision. We've got Republic First Bank going under. Remember, guys, this is our Everything Money 24/7 channel. If you want to hear 4 or 5 videos a week on what's going on in the markets, instant reactions, guys, when we announce earnings, it's literally posted video 30 minutes after earnings are announced. We're the fastest channel to report earnings and news. Please subscribe to us. I guarantee you're going to love getting the news on a weekly basis, several times per week. First off, though, Mo, look at these companies all reporting. Big companies. Sofi, a lot of people love Sofi. They're coming in this week. And what else is? Chegg? Domino's. Guys, you want to hear something funny about Domino's, Mo? If you go compare the charts between Domino's and Google when they went public, Domino's actually outperformed Google or something like that. Have you seen that? Yeah, absolutely. No, isn't that incredible? By the way, Mo, are you going to share with us which live golfer you're playing golf with this week?
Well, I can't say because I don't even know. It's a surprise. But if it's
Brooks afterwards,
Koepka,
you're going to tell us who it is?
Afterwards, I'll tell you.
This is exciting. Mo's such a big hobnobber. He gets to golf with a live golfer this week.
If it's Koepka, I don't know how I'll perform.
Can you wear a shirt that says live equals sellout?
I like live. That's the problem.
I know. I'm teasing. I don't think it's a sellout at all. More power to him. But yeah, look at these. Domino's has outperformed. Tuesday, PayPal. You guys, I own PayPal. Don't own a company just because I do, but I think it has a lot of potential. 3M, another company. Ooh, McDonald's and Coca-Cola, my 2 favorite things in the world besides Chipotle. Oh, Amazon. Eaton Corp, based out of Beechwood, Ohio, right down the street from us. Amazon, AMD. Oh, AMD, everybody's going to be watching AMD. Why? Because of AI with AMD.
Yeah.
Pinterest, Root. I don't even know what Root is. Okay. Oh, Starbucks. Yeah, I didn't even see that. Nice work. Okay, Wednesday, Norwegian Cruise Line, Marriott. So we're going to see a lot about the consumer out there. Are they traveling a lot? Oh, Carvana. Oh, my God. Who would you say? Oh, Generac. Love Generac. Please, Lord Almighty, who I love so much, please let Generac fail as a stock and go below $100 a share again because I want to buy more shares and the stock is too expensive. Please.
See if he answers.
Jeez, oh, Pete. Oh, I got to do the cross right here. Like, there we go. Just like the athletes. By the way, isn't it amazing at the draft, every athlete's like, first off, I want to thank God for everything. I mean, listen, more power to them, but I just think it's just funny to me because half those guys get accused of shit. So anyways, Coinbase and Apple on Thursday. Ooh, Peloton. Will they declare bankruptcy on this call? Wouldn't that be funny? I'm just kidding around.
That would be hilarious.
That would be kind of funny. Peloton, the company that couldn't miss back in the day. Wayfair, okay, not bad. Friday, Hershey's, look at that. Hershey's on Friday. I love that. Fubo, I just paid $8 a month for Fubo just to get baseball games, essentially. It's just stupid.
Did you say $80 a month?
Yeah, it's like $8 a month.
Wow. So is it
for
like
the sports
YouTube
package?
TV?
Kind of, but it's mostly driven by sports. It's more sports driven. Like I get like NBA League Pass and all these other things for my thing here. Okay. Anything else? Oh yeah, Brookfield. Okay. Yeah. So guys, big week on earnings. Again, you got to follow the channel because we're going to do a lot of these earnings reactions, especially if they're big earnings reports. I mean, look at last week. We had Tesla miss on both earnings and revenue. Skyrocketed. Speaking of which, Tesla's actually up today a ton, 12.5% at one point. Why? Because Elon made a surprise visit to China and they've embraced his FSD, which is a big thing for Tesla. We get that. And then also last week, who reported and crushed and then fell? Was it Meta? Meta was the one.
Meta, yeah.
Meta reported
on every category.
Every single one. By the way, nice haircut, Mo. They crushed on earnings, they crushed on revenue, and the stock fell big time. We want stocks to fall. That is the mentality of this channel. We want lower prices to buy companies we love at better prices. We're the kind of channel that loves that. There'll be a time in the future when we love so many stocks because every stock is cheap because everybody has just changed their mentality. Why are you laughing, Mo?
Because I can't wait for that time when people we got a lot of criticism for not buying stocks. We're eventually going to get criticized for buying so many stocks.
Yes, 100%. And by the way, it's already shifted. Some stocks we love have fallen so much in price that we're buying them now, and it's already shifting where big companies that we like Nike, Starbucks are selling for reasonable prices. We were able to buy some Generac. I was able to buy Target at really low prices. Google, you were the smart one to do Google. I was not smart enough to do that. So I look at these things thinking, okay, there'll be a time when this all shifts again. And when it shifts, we'll be ready. And that's the mentality I want you to have because, guys, fundamentals are important on companies. It's important to understand those fundamentals, but if you want to make long-term money and let your wealth compound, you've got to be in charge of your emotions. That's absolutely the most important thing in investing. And the more and more investing I do, the more and more I realize that. You know, there's that whole tin can theory where if you just bought a bunch of companies that were big companies, I think it was something like if you bought the 30 Dow companies like 60 years ago and just did nothing with them, after bankruptcies, acquisitions, spinoffs, you'd still own 26 companies and you'd have made a 12% return on your money, outperforming the market. Isn't that incredible?
It's amazing. If you just sit and don't let your emotions take roll of anything, you're going to be good.
You're probably going to do well as long as you have a good process. If you have a good process when you buy and you buy at the right, just let your winners run. Just let them run. That's super important. Now, isn't this funny, Mo? We had a bank failure last week. We had Republic First Bank, not to be confused with First Republic Bank that failed last year with Silicon Valley Bank for a total of $200 billion in assets. So last year, First Republic Bank failed. This year, Republic First Bank failed, which was a much smaller bank in Philadelphia.
And I'm convinced it has nothing to do with fundamentals. It just has to do with the name. The name is what brought them down.
They're calling Republic First Bank Republic Bank, just I think to make it easier. But if you probably heard that and said, wait a second, didn't they already fail last year? Totally different bank, switch the names around. Like, don't follow money everything, follow everything money. Same thing, right? It's like, don't follow 24/7 money everything, follow everything money 24/7. That was a lame joke, but it's still got a chuckle. But the Fed rate decision is on Wednesday. Mo, isn't it amazing how the Fed rate decision has changed so much in the last 4 months? 4 months ago,
it's hilarious. If you look here, so 97.3% of people say that we're going to stay the same. And that was expected after last meeting. But as you go down the list, like, look at this. The following meeting in June, 88.4% say that we're going to stay the same with rates. And then you just go to the end of the year. I mean, there's only 38.6% that are saying 5 to 5.25, 30% saying 4.75. But Paul, look at this. You go to next year, September of next year, it's dropping basically 1 basis point. And we were hearing that they were going to go into the 3s, into the 2s for interest rates. And that was what?
100 basis points, going down 100 basis points, 1 full percent.
100 basis points, sorry, 100 basis points. And we were hearing that it was going to be down here at that point of 2025. It's remarkable. And it just shows nobody knows what the hell they're doing.
So that's the big thing here. Mo, can you do me a favor? Can you find those charts from back in December and pull them up? So like to see in December, what did people think was going to happen at this rate meeting? Where did you think we were going to be? Because guys, that's the main goal here. We always hear these pundits, everybody saying, here's what's going to happen. Nobody has a clue. And anybody who thinks they know what's going to happen in the short run is an absolute moron to even say that. Can you get an idea of what's going to happen in the long run by saying, hey, like I sit there and say, guys, our debt levels are crazy. Look at our interest payments. I think our interest payments just surpassed $1 trillion on our national debt. What do you expect is going to happen? We have $34 trillion and growing every like freaking 3 months. We gain like $1 trillion in debt. These to me say, okay, we're kicking the can down the road. At some point, there's going to be some come to Jesus moment. We have to figure out what's this debt going to mean to us. Now, are there ways out of it? Sure, we can inflate the hell out of it. I believe the government secretly wants inflation. Why? Because that's how you get away from this debt to GDP problem. Think about it this way. Let's look at the math here. If you have $35 trillion of debt on $28 trillion in GDP, you're essentially at 100 and so let's say at 7 out of 20, 125% debt to GDP. If you want this below 50%, how do you do that? You inflate the F out of money. So let's say that you inflate things so much that GDP goes to $100 trillion, which is quadrupling, but your debt only goes up 3 times. So you're not at 50%, but now you're at 105% versus 125%. I'm going to extremes here, but the point is inflation helps the government. Inflation, just like your mortgage. If inflation is 100% tomorrow, your mortgage doesn't go up at all. Your mortgage payment from principal and interest stays the same, and your mortgage balance stays the same. It's no different here. The government's going to view it the same way. So when you sit there and say the government's trying to fight, they're trying to fight inflation for U.S., but guys, at the end of the day, no matter what side of the aisle you're on, Democrat or Republican, doesn't matter. They're all voting for the same things. They're all voting for wars abroad that are costing us hundreds of billions of dollars. They're all voting for all these social programs that cost us trillions of dollars a year. That's it. This is not a political statement. This is a fact. You cannot argue otherwise. If you're arguing otherwise, you're fighting objective truths. We're just spending like crazy. And long term, that will have an effect. When? I have no idea. But look at Japan. Japan, for the longest time, had the highest debt to GDP ratio. They still have one of the highest. And guess what? They've seen stagflation. Yes, they have other issues, aging economy. Spoiler alert, so do we. Is it as bad as Japan? Not even close. But guys, every bubble starts on a very reasonable premise. Oh, debt's okay. I'm a big believer in debt. In fact, I hate Dave Ramsey because of how stupid he is, saying that he wouldn't take $1 billion at 0% interest as a debt. That's the other extreme of stupidity. Okay? That's where I sit there and say, wait a second, this debt will have to, as rates are up higher and debt goes higher, what's going to happen to that $1 trillion in interest payments? Guys, $1 trillion in interest payments, that alone is 3% of GDP. That means they have to raise taxes 3% just to make that go away. If anybody here thinks you're not going to have higher taxes, you're absolutely going to. You're going to have higher taxes at some point down the road because this debt to GDP will become an issue some point. Mo, have you found that at all?
No, not yet. And I think it's because it moves. It's always moving. So I'm going to find it. And I think that we'll just clip it in and it'll show people. But what you're going to see in that is that people were predicting that we were going to just be cutting rates. And it's just obviously
people were expecting March to be the start of rate cuts.
Very much so.
Yeah, like I said, I know Mo disagrees with me sometimes, but I think Fed Chairman Powell has done a great job of saying, listen, we got to fight this inflation. I want to be over aggressive with it because if we get inflation out of hand, we're going to have problems. Spoiler alert, the more money we print, this is going to be an issue. Right? When we talk about higher minimum wage, that's inflationary. All these things. Remember, if you want more people in this country to make more money, that means higher costs, which means less jobs in this country manufacturing stuff. It's not just a one domino effect. There are multiple effects to everything we do. You're going to listen on Wednesday. Remember, we want to buy good companies at good prices. Good companies win in the long run. Good managers have good processes no matter what the economy is. So it's important that you have the emotional fortitude to not care about what's going on these Fed rate decisions, on these short-term company earnings. We want companies who are going to invest in the future. Every company can't beat on every earnings. Use that opportunity when they don't beat or when the stock falls because of it, like Meta, that you use the opportunity to buy good companies at great prices. The emotional part's the hardest part because we've all seen companies we love fall, and it's hard to sit there and say, is this done? When we saw Meta, look at Meta. Here's Meta in our software. Guys, this fall to here, Meta can't miss, best company ever. Zuckerberg needs to be fired. X on Zuckerberg, everything, the guy was dead, $88 a share. Now he's a genius again. Now, granted, they're still pissed at him for keep investing in the metaverse. I get that, but they're still killing it even with those $10 billion a year losses in the metaverse. News follows the stock price. News was bad here. News is much better here. Your key is to be like us. Go look at our videos back here. We thought Meta was an obvious buy. I absolutely got lucky and bought on November 4th. Now, I made a stupid emotional decision when Meta hit 195 so quickly, saying they're going to have a pullback. Whoops. But at the end of the day, that's an emotional decision I made. Learn from my stupidity. I regret that so wholeheartedly, but it doesn't make me change the way I look at Meta. I don't look at it. I look at a company's price relative to value, and that's how I determine what I'm going to buy, if I'm a buyer or not. If price is above value, I don't buy it. If value is above price, I love it. That's why every investor out there, you cannot say you're an investor without saying you're a value investor. So if you want to become a better investor, if you want to make less emotional decisions that'll help you make more money, guys, click the link below. We actually have a wait list now, so make sure you click it to join our community. $7 for 7 days. There's a wait list every single day. We have X number of spots we allow. Go sign up before the spots get taken. The wait list started today. Now, guys, here's a bonus for you in this video. Sofi just reported they're down 9%, even though they beat on earnings per share and revenue. They got 2 cents per share in earnings versus 1 cent expected. Sounds like Palantir. Just kidding. And then 581 million in net revenue versus an expected 560. Mo, you know what I did last week, 2 weeks ago? I opened a Sofi account.
Did you?
Very easy.
Really?
Extremely easy.
Was it because of your Venmo problem?
Well, yes, because for some reason I can't add my US bank. It's as weird on Venmo. Something happened in my account. It wouldn't register my US bank account, but yet Lisa, my wife, has my US bank account on her Venmo and it works just fine. But Sofi, it's been super easy. They sent me a debit card. I got the debit card. Very easy process. This is a bank. They're down 9%. Understanding a bank's a little bit different. So I don't necessarily look at it, but guys, they're a fast growing company. Look at this. Number of members, 5.6 million up to 8.1 million in 1 year, in a little over 1 year. Big time growth right here. Look at this. I can see it slightly. Products, all these things. Oh my gosh, this is great.
Interesting.
Big time growth for this company. It's a very exciting company. Glad they made money. 2 cents versus 1 cent expected. Revenue keeps going up. Let's see what they are at right now. Let's look at them because we can't really analyze them, but let's pull them up in our software to see how they're doing today. Yeah, down almost 10%, $7.11. Guys, look at this. All-time high. June 2nd, 2021, $25 a share. They're down to 7. Wow. Yeah, I mean, it's just not making money yet. It just started making money. Their free cash flow is terrible. But look at their revenue growth. They're over double the revenue growth from the time they hit their all-time high. That just shows, guys, stocks in the short run are a voting machine. In the long run, they're a weighing machine. So if you understand banks, we have a community chat in here just for banks. Again, guys, we have the wait list started. So go sign up now before the day's number of spots fill up. $7 for 7 days. Thank you for your time.